Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Here is the Nifty's daily chart taken from our website. It is very important to understand Nifty's price volume action. It gives an overview of how the markets are playing at the current moment and also gives an view on the market for the short term as well. As you can see here, from since election results were announced, there was a huge volatile move on that particular day. But from there, since the market has found good stability and has advanced consistently from there, and it reached 25,000 level as well, which is the record level on the Nifty front. Broader market indices have also scaled new all-time highs during these times. But in the last two trading sessions, profit booking has happened on Friday, which was a gap down opening and closed near the day's low. But yesterday's session was a very peculiar session. You can say it is driven by market macroeconomic events, starting from Japan's yen carry trades, which have been which have been going on for years. Uh, because of increasing interest rates in by Bank of Japan, these trades have come down slightly, and this started the sell-off across the globe. Asian markets were down massively, around 5 to 10%, and Nikkei, Kospi, and Shanghai yesterday. And the same has been done by the Indian markets and also globally as well. We'll talk about global market update in the upcoming slides. So Indian markets were also down almost 2.7% in the yesterday's session. The good thing about yesterday's session was Nifty 50 DMA has not been breached, which is one of the positive side. If you look at historically as well, in the last 1 year, Nifty 50 DMA has acted as a very good support for the Nifty index. Whenever Nifty advanced consistently, it retraces or pulls back towards its 50 DMA. That has been happened in the yesterday's session as well. And yesterday's session was clearly a distribution day because Nifty fall was more than 0.2% and the volume was also significantly higher than the previous session. So we considered it as a distribution day. So currently distribution day count is at 2. It is not a major uh, cautious thing to consider, but if the count increases to 4 or 5 and Nifty breaches is 50 DMA, then we change the market status to under pressure. But until then, we continue to stay in confirmed uptrend. Coming to the model portfolio, we have booked or exited some of the stocks in yesterday's sell-off, and we'll be closely monitoring existing stocks as well in the today's session. And we are expecting a positive opening on the Nifty, and we'll talk about it in the later slides. But if the positive opening is sustained, we might see positive opening on the Nifty stocks as well. Earnings season is still continuing, and some of the companies which reported earnings in the yesterday are starting with the Bharti Airtel has come up with their numbers for the June quarter. Revenue for the quarter was up 2.4% year-on-year basis to 36,000 crores of rupees. Profit on the other side has doubled, almost more than doubled in the last quarter to 4,100 crores of rupees. EBITDA margin has also saw a dip of 30 basis points to 51.8%. Average revenue per user, which is a key parameter in the telecom stocks, has seen an improvement of 2 rupees for the quarter to 211 rupees. ONGC has also come up with their numbers. Revenue was up only 1.8% sequentially to 35,000 crores of rupees. Profit on the other side has seen a dip of 9.4% to 1,800 crores of rupees. Triveni Turbine revenue was up 23% to 463 crores. Profit has also seen an improvement of 32% to 80 crores of rupees. So it was a good result on the Triveni Turbine front. ONGC has seen not so good growth rate in terms of revenue or profit saw a decline. Deepak Nitrite has also reported good set of numbers in terms of growth. You can see revenue growth was more than 22% to 2,000 crores of rupees. Profit has seen a growth of more than 35% up to 200 crores of rupees. Coming to the institutional activity, yesterday foreign institutional investors, as expected, are net sellers in the Indian market. They sold more than 10,000 crores of Indian equities, which is a huge number. Whereas domestic institutional investors have tried to give support for the Indian markets, they have bought almost equivalent amount of sell-off done by the FIIs. They have bought more than 9,100 crores of rupees of Indian equity. So whenever there is a huge sell-off from the foreign institutional investors, domestic institutions have been giving good support for the Indian markets, which is a very positive sign. Coming to the today's session, we are expecting companies such as Tata Power, Cummins India, Power Finance, Vedanta, Pi Industries, Lupin, TVS Motors, and other companies to be reporting their numbers in the today's session. So, if you have any of these stocks in your portfolio, please be watchful. We might expect volatile action driven by the results. Coming to the global market update, US market has also closed lower in the yesterday's session because of global sell-off, which has been there starting from Japan, Europe, and as well as in the America as well. Asian markets today have seen a rebound. A sharp rebound was seen in Nikkei. It was trading more than 9.4% higher, which is a huge up move. You can say most of the losses were recovered in the yesterday's session. And Kospi is also trading at more than 3% higher, which is a very positive sign. Shanghai has been trading flat with positive bias. So overall, Asian markets have recovered from the lows or from the losses which made yesterday. SGX Nifty is also indicating a positive opening for the Indian market. So most of the losses which were done or happened in the yesterday's session might recover in the today's session. So we might see a positive opening and uh, Indian market opening on the positive side is a good sign for our Indian our model portfolio as well. So most of the we made a loss in the yesterday's session. So we might see recovery in our stocks as well, and we'll be closely monitoring our positions. If there is any stock which is not performing well, definitely we consider to exit those. For the chart of data, we picked Inox Wind. The currently stock has been trading in a complete handle-based pattern, and it is trading very close to the pivot, as you can see here. The volume has also picked up during the journey towards its pivot, which is a positive sign. Ratings have been very good. EPS is slightly lower because last quarter EPS was negative, but apart from that, technical ratings have been very good. Number of funds have seen a very sharp improvement over the last 1 year, which is a very positive sign that indicates good accumulation by the institutional investors. I can see here blue towers have been good accumulation by the institutional investors, and the price movement has also been very good for the last 1 year. Overall, the stock is looking very good, and if it breaks out on good volume and if the market recovers, definitely a very good stock to consider if you are looking for fresh investments. Thank you for joining today's pre-bill. Have a good trading session.